Hello, welcome back to my channel, Martin Day Trades. I am Martin Gonzalez, and today I want to go over my weekly trade recap, do a back testing session with you guys, and go and journal. I want to journal my trades. I should have been journaling every day after the trading day, so that I could do some self-reflection and build confidence in whether I won or lost with my trading system, where I like to enter and where I like to exit. But yeah, let me get back with you guys. Let's go to the charts and let's just get straightforward to this. Okay, so I have Monday up here, July 7th. I marked up the highs, the liquidity areas with the highs and lows. I think I could do a little bit better with this Asian session high right there. Okay, so you can see where I marked up the highs and lows of the previous day low. This was on Friday, July 4th. The previous day high is right here. It's not the Asian session high, it's the previous day high, which is the start. Asia starts the new day. So I marked up the previous day high right there. Then I go to the Asian session, which was created on Sunday. Well, my time Sunday, but it is the start of a new day. So I did the high and the low. You can see that marked up there. And then going into Monday morning here, New York time. Well, I'm Arizona time, but I talk in New York time. I did the London low, which is right there. See, you gotta sometimes go to the minute to see that. And I'm marking up the high, which is being created at this current moment in the past. So what I want to do is just kind of skip a couple of candles going into the morning. It is 8:35 right there. I'm on the 5-minute candle, so I'll just kind of click a little bit further into that. This is now 9 o'clock, so 9:05, 9:10, 9:15. Okay, so from this point, we have the high and we have the low. This would have been a good trade right here. Just the sweep of that previous day high during London could have given a great trade. 50-point stop, let's just say, to have targeted a 1 to 2. That would have been a great trade right there. But I trade the New York Open, so I'm waiting patiently right now. It's 9:10. Let's go ahead and kind of just zoom in a little bit on this. It's 9:10, 9:15, 9:20, 9:25. Okay, so Monday, I caught a dub, but I want to be able to see if I can actually reenact my actual trade for the day. So as you guys can see here, London had a push up. So we could theoretically wait for this London low to get ran to then go higher. Or what we can do is just do a Fibonacci right now since it's so close to 9:30. Do it from this low to this high. And we're already right there. We can see that the London low is close to that 79%. Is there a big figure level right there? There isn't. We're already at that big figure level, 45,000. So we can go to the 30-minute. I hope it doesn't go further. 9:30, 9 o'clock. Okay, so there is a gap up here to go lower. Right here, we could do a fib retracement from this high to this low. And, you know, that aligns with the Asian session high of 38%. We could take this trade to go lower as well, which, you know, if we do, it's going to be right around the 45,050 level, right at that Asian session high. 50-point stop to then target a 1 to 2 or 1, 2, 3. I think that's fair enough right there. We could even target the previous day low. Okay, so I think this has a lot more room to go down to take previous buyers out. So I'm going to go back to the 15-minute chart. It is 9:15. So from this point forward, well, we'll go to the 5-minute chart. Okay, from this point forward, I think I like the sells unless it sweeps this London low first, and then depending on the risk to reward, 50 points, could take this higher. Now, if it starts to drop really hard, where's a 1 to 2 right there? That would be a 1 to 2 setup. So let me just see what's going to happen here, guys. I'll leave this up here. I have two setups that I'm looking at right now. Let's just do this 50 points to a 1 to 2. Could try to take that London high out. We'll just go to a 1 to 3 right there. Both trades are a 1 to 3, okay? Risking 50 points for 150 points. Let's see what happens. Regardless of where the trade goes, at this point, let's just say I have a buy limit order and a sell limit order at these price points, waiting for a reaction. Okay, I didn't even see what happened there. It went both directions. So what I'm going to do is just go to the minute. Okay, so I would have gotten in for this sell up here. Let's get rid of the buy. And it came down. I don't know if I would have moved my stop loss to break even just have quite yet, but it is ranging right here. It did have a reaction of more than 50 points. There was like almost a TP2 play right there. That would have been a great trade to have gone in at that 50%, 45,063 instead of 45,050. That's 13 points right there. But I wasn't looking right there. I already said I would have gone in right there. So let's just see what happens. 5-minute chart at this point. If it starts to go higher, it's probably not a very good trade idea, but let's just see. Okay. It targeted that London low. Okay. Where's 1 to 2? Actually, a 1 to 2 would have gotten smacked right at that open if I would have just wanted to take a 1 to 2. I think this is the trade that I caught a 1 to 3.5. Let's see, right around this area. So let's keep going. Yeah, I think that's the trade that I caught right here, guys. I think I might have gone in a little higher right at that 38%. So I just want to this would have been the trade that I caught for Monday. Now, that was a good trade. Someone could have caught from down here, like I said, London low to that, I don't know if it would have been a TP2 trade. Let's go ahead and see that. London low, 50-point stop, 100 points, not quite there. It was right here. So if someone would have caught this trade and it already had went to TP1, they would have moved stop loss to break even. This would have been a break even trade, hoping for it to continue to going longer. But once it started to fail and not rally higher, keep the stop loss at break even because there's a high probability that it would just fail if you weren't in for the sells. Okay, so that's Monday's trade. Let me go ahead and document this. This did take a lot longer than I expected. I was in this trade I'm not sure if I got in at that price point now that I'm thinking about it. No, I think I got in right on the retest of this London low, or as price was coming down, because I was in this trade essentially all day. And this is, it closed me out around this price right here. So I didn't have a 3.5. It was like a 3.44. Okay. So this was the trade that I caught, 50-point stop. It came down, but I was waiting for it to have that break right here. Once it broke right here, I decided to get in for the trade right at that London low. But this was my trade idea. I remember now. I'm going to go ahead and screenshot this 15-minute chart. And we're going to journal, guys. We're going to journal. Copy image. Go to the daily journal. As of right now, you guys can see I'm down $330. This June 9th, I saw a TP2 trade, and then I moved my stop loss to break even. But as price started to come down, I moved it back to my negative TP1, and I took an L. Unnecessary. This could have at least been a 0, or if I would have just taken my 1 to 2, I would have had a 1 to 2, and I would have been break even on the on my whole P&L. This day right here, guys, like I said last video, is unacceptable. This $500 loss day should have only been 100, and I would still be break even at this point, even with taking the trades that I have executed. So you cannot lose more than, you just can't over leverage. I over leveraged, and I took extra trades this day. Took 3 trades, 200, 200, and $100 loss when I should have just taken a $100 loss and then kicked rucks. I'm doing pretty good with my $100 risk right here, 100, 100, 150. I took 2 trades. I lowered my second risk by 50 once it started to fail, and it just continued to fail. I should have just took that 1 trade. But you can see that I'm actually doing pretty good keeping my losses small, and I need to catch a 1 to 2 or 1 to 3 early on in the week, preferably Monday, so that I can be if I catch a 1 to 3, I'll be negative $29 in the P&L, and then just keep trading the way I've been trading, so I could be profitable. The reason I'm not profitable is because this one day where I kept just trying to force a trade. If I didn't force that trade right now, I'd be break even or in profit, but I would still be down in the trailing drawdown because well, let's see, I'm down 329. I took a $500 loss, but let's say I just had a $100 loss, so I would have saved 400. Right now I would be up in the P&L by 400 by $70, okay? And then, this day, if I would have just kept it as break even, 70, I would be up 170. And let's say I did take that TP2, I would be up $370 right now if I just didn't mess up on this day and this day. And if I only took 1 trade on this day, 370, I would be up $420, essentially right where the high of my P&L from starting this funded account. So little mistakes like that, guys, add up every time. So let's go ahead and journal. Go to Monday, view note. Okay, so this was June 30th. I think this was B entry, more patient, confluence, areas hit, higher probability. 9:45, 5-minute fair value gap. This is this. Wait, this is July 4th. Okay, so so this was an earlier date, July 4th. Where's July 4th? Right there. Okay, July 7th, actually. July 7th. View note. And it looks like, I don't know what's going on here. Okay, so, Monday, July 7th. Monday, July 7th. It looks like I had a break-even day on Monday. Okay, so I didn't take that trade, but now back testing, I know I should have taken that Asian session high trade up here to go short. If anything, get in at the London low, retest or something along those lines. But I already did this, so I'm gonna stick to this right here with what I have. Let's go to Tuesday. This was a good trade right here, a 1 to 3 point, let's go to 3.5, even 4. This was a great trade. Okay, so what we're gonna do is just delete this, delete that, delete this, and we're gonna continue forward to the next day. Asian session range. London, K, 615, 730. Okay, so it's 7:30, 2 hours till the market opens. Let's zoom out a little bit. Let's go to the hour. It's 8 o'clock on the hour. You can see it's already it had a rejection off this 50% fib from here to there. Could technically even go from here to there, and that's close to that 79% fib level. So it's rejecting off this area in price. Let's go ahead and just move our liquidity lines over. So London high as of right now is right there. Previous day high right there. Asian session high right above that London high. London low was created right there. Asian session low we can see is right there. And the previous day low is right there. Okay, so we see where there was buyers and sellers coming into the market, highs and lows, during which sessions they were created, right? Now, we are also going to look over to the right, and you can see the big figure levels. I'm not going to mark them up with any lines, but just keep in mind big figure levels are the I'll just use 44,000 as an example. 44,000, that's a psychological big figure level. 44,200, 44,500, 44,800, and then the next 45,000. So those, the 000, the 200, 500, 800, and then the 000. Again, those are all psychological levels where people call support and resistance, or supply and demand, or psychological levels. Just keep those levels in mind, okay? If they align with confluence of these liquidity lines that I have, the highs and lows that I have drawn up here. Now, what I want to do is just go forward, and it is 7:45, 8, 8:15, 8:30, 9. Okay. 9 o'clock, or that's 8:45, we'll go 9. Go down to the 5-minute, and what I want to do is just kind of get a closer look. This is 9:10, 9:15, 9:20. Okay, at 9:20, I like to have an idea of what I would like to see. There is on this 5-minute chart a fair value gap in this area right here. It kind of already got into it with these right here, but it could push a little higher to then go lower. But I don't like to trade within these liquidity zones or these fair value gaps unless they align proportionally with the liquidity zone. So right now, as of right now, remember how I said that it had a reaction off this 79% level and it didn't want to go lower? We could see something where it wants to go higher and take, it's already been, lows have been created, Monday. These are lows, okay? We don't know if it's going to go any lower, but as of right now, I would like to see, a reaction off this. Where's our big figure levels? There, Asian session low. There's an Asian session low close to that 500 level. There's a previous day low, which is way down there. The London low's right there. We saw this move down, rally, come back down. It didn't want to, if someone's looking to go long, at this point, it would be right here, I would say, for me to get in, and at a 50-point stop to then target this London high, which is a 2.5, I would say 2.5. But Asia session high is just right there, so I would try to squeeze a little. Nah, I wouldn't try to squeeze it. I would just keep it at 2.5, and that would be my buy trade. But if it starts to come up higher, I don't really know how high it would go, because I think we would just have missed the trade at this point if it just starts to go high. I would have to wait for a retest to then go long. So let's say price starts to squeeze higher and we didn't get the entry because it didn't sweep this London low. We would have to wait for, um, do I have one of those? Okay. So, let's just say price comes up, starts to pull up. What goes up has to have a retracement. So let's say it retraces, where would be that align with the fib plus these Asia high and London highs right there. So then I would wait to get in right here to then take 1 to 2 or target that previous day high. I'm not really sure. 45,000 is right there. So let's say we'll see what happens, okay? Because if it's going to start to move bullish, I wouldn't want to sell, because I know that it's going to start, it reacted off right here, didn't go any lower, and it's going to go higher. So let's just see what happens, okay? Time is it? Oof, right there. Okay, so 9:30, trade is active. I'm not sure if this is going to be a quick L. It's already, right there. So let's go ahead and just keep going. I got my fingers crossed. We don't really know, guys, but the only thing we can control is, hey, I'm willing to risk $100 at that point right there. If it stops me out, then my trade analysis, my trade idea was bad, and I will be back tomorrow. That's a hard pill to swallow, but remember, best loser wins. Because then if I try to force a trade, I don't really have any other trade ideas. I'm just gonna keep losing 100, losing 100, losing 100, and $100 loss day could easily turn into that example I showed you guys where I lost 500. So we're gonna just be in control of our emotions. Take a breath. This is already giving me some form of anxiety. I've been really good at conquering that through just actually doing this, right? Trading, actually trading, I actually do this. So I'm controlling my my heart rate just by seeing this. My heart rate's starting to go up. I can feel it. But it's just numbers, guys. It's just the lines and candles on a screen, and there's nothing really to be afraid of. It's just a normal human function to feel this way. But it's our duty as traders to control the outcome and control our risk. I'm willing to risk 100. Let's see what happens. Okay, there was a great reaction, guys. See what I mean? Look at London low, 50 points. It came down, came up. I'm not sure if 81, 91, 1, 11, 21. At 21, I would have moved my stop loss to break even. So at this point, it was so close to that 21, the mark, I probably would have moved my stop loss to right under that low. Okay? So I can minimize, because if price is gonna not rally here and this is the drop. Okay, so remember how there's a break and retest that a lot of traders like to do, right? A break and retest, right? So this is the break under this low. Can you guys see that, right? Okay, there was this 930 move, had a drop right there, bearish drop. Now people who could say well, there's the volume, right? Let's use a fib to get in, and people could have gotten in at the 50% or right at where this gap was created, anywhere in this point. So let's say someone went short here, right? Now, not a bad trade idea, right? Not a bad trade idea. 50-point stop right at the high of that drop, right? And targeting maybe this Asian session low, right? That's a 1 to 2. Okay, so let's see. Okay, so at this point, I've reduced my risk close to not fully halfway. It's still 30 points, and I was risking 50. I would need to risk 25 to lose only $50. Right now, I'm risking $70, but $70 loss is better than a $100 loss, right? So let's just continue and go forward. Okay, so definitely had that push higher, right? So these people who got in for the sell are kind of freaking out. I'm not, because they had this push. It is now at, I am now risk free. Originally, I had a 50-point risk, right? It was down here. And what I want to do is just uh, keep that risk. Let's see if I can't bring that back down. Okay, I'm risk free. I don't want to move this because I want to be able to see the numbers. I'm looking for a 1 to 2.5, right? You guys can see that right there, risk to reward. Let's just continue going forward. Oh, okay. So guys, this is the I have to trust. This is why journaling and backtesting is so important, because I'm building faith as I'm doing this with you guys to see where, this could have happened real time, right? But real time compared to backtesting is a lot different. You're going through those motions of actual real time, having to be patient second by second by second by second. Right now, I can skip forward 5 minutes, right? So this is a great trade, TP 2.5. Wanted to show you guys that, and let's see, because at this point right here, London high, a lot of if other people like me, I would look, if I was bearish on the day, a new wave of traders coming into the market, could sell at this, London high, Asian session high, or if it kept going up to this 800 level, look to then start selling at the 800 level to then go back down lower. Now, what I would like to recommend is if this keeps pushing higher and goes up to 800, I would look for a retest, right? I would look for a retest from this low to, let's say, the 800 level, and it aligns right there with the London high. So if this keeps pushing higher, I would wait for it to come back down to then go higher to get an entry. If I missed this entry down here, let's see what we can do. I want to use this line. We'll say it comes back down to then go higher. Okay, if that's true, I'm already out the market, gone, took the profits, and I'm left. But I just want to see what happens here. Okay, okay, okay. That did not happen. So this is why it's important to kind of get in, get out. I knew that the London high could have been swept, and it was right there. You guys can see that. And this is where precision comes into the markets, guys. Right there on the 1-minute chart was the London high. It swept it 704 to 707. So that's only 3 points. And it swept it, though. It swept it, and then it had a reaction going lower. So, someone could have caught a TP 2.5 going up this way. Someone could have caught a TP 2.5, TP3 going down this way. I don't really know what's going to happen anymore. But yeah, so at this point, it's just chopping around for the day. Remember, guys, you guys just want to get in, get out. We don't really know what's going to happen anymore at this point. Kind of just chopped for the day, right? There we go. See? So it's good to just get in and get out at these London lows, London highs. Usually it's London low, London highs I like to trade off of. But you could have traded off of this Asia session low to then go higher. Let's see. Could have caught a nice TP 2.5 right there as well. So you have to wait for these purple lines that I have drawn up, guys, to actually get in for the trades. Now, what I want to do is I just want to journal this, although I had essentially a winning week, but it wasn't a great winning week. I had one win and one win, two break-even days, and 2 losses. I had a TP 3.4 or TP 3.3, something like that, and then I had 2 losses. So I only got a gain of like $120, but I'm not gonna discount that. I do wish I could have traded a little better, had more faith in these London highs, London lows. Could have caught more points this past week. So let's go ahead and go long, like I said I was, at that London low, 50-point stop. Looking to get out at that London high, which I would have, TP 2.5. Okay, TP 2.5. Is there a big figure level right here? 483, 450 maybe? No, I never got to 450 either. So you just got to have faith that, it's not going to be exactly at 44,550. You want to just get in, kind of just put these charts kind of where they need to be, right? So, I could have had the London high right here. And if I said I wanted an exact TP 2.5, where would that need to be, right? So let's move this down to TP 2.5, my entry, and I wanted to exit right at the London high. My entry would have needed to be right at 44,579, and I could have had a buy limit there, right? I could have had a buy limit. I didn't have to get in right exactly at the London low, but sometimes it hits just for like an example, this London high, it tapped it and then it had an immediate reaction. So I like to just keep these right there. And it's unfortunate. I don't think it would have been an exact TP 2.5, but I would have had a TP 2.42 winning trade minus the $2 commission fee. So yeah, this is my trade right here. I'll just go like this and I'll screenshot this. I'm gonna go to the 15-minute chart, kind of zoom in a little bit, spread that out a little bit. Okay, so I'm gonna actually just copy image, journal this day, Tuesday. This was actually a winning trade. I don't really remember if I went short. Oh, I did go short on this day because I was looking for it to go under this Asian session low, but I could have caught the dub going up this way too, right? So I caught the short going down from London high, looking to kind of look for, it did tap TP4 on this day. I caught a TP3, 3.4. So really good, happy on that trade. As of right now though, like I would have, like I didn't align, my back testing did not align with this. So soon as this had a reaction, I'm like, okay, well, where could I get in to go short, if this is real time, right? So let's say I did get in right here, 50-point stop, TP4 would have been right there. So in fact, I did get in at that London high. And there was a couple of times where it did tap TP4 and I just didn't take it off the table, and Top Step actually closed my account, closed my trade out right there. So there was a lot of profits I left on the table just because Top Step closed my account out. So this is important. Remember, guys, how I said, oh, as soon as London high gets ran, there's probability of traders getting into the market. That was me, except I didn't realize that until I looked at my daily journal, my P&L, and I was that trader that got in at the London high. Now I could have got in at the London low, got a TP 2.5 and kicked rocks, but I'm kind of glad I got in at this London high because then I was trying to aim for this London Asia session or previous day low, which it never did. I was looking for a TP 2.5. Actually had a hard take profit now that I remember. And I think it got to it later during London or the next day Asia. Right there. Yeah, so it did actually get to that 500 level, but Top Step closes trades out about an hour before the market closes for their traders. So this would have been this was a winning trade idea. And then right here immediately it had a reaction to go up. I remember this trade. I was like, damn, that's crazy. So daily journal Tuesday, add note. I don't have anything there. So what I'm going to do is I'm going to just, so I assumed the market closed at 1645. I think soon as Asia starts, it closes the session out, and you can see there's an overlap. So right at 1600, so that's 1:30, 2 o'clock, like 1 o'clock Arizona time, 4 o'clock New York time, the trades close out. So Let's see if this aligns with 3.4. Yeah, I got closed out like right here, right there. So that was my trade. It was a winning trade idea. It went down to the previous day low. If I continue, I think it does run that. Yeah, right there. Boom. Ooh, just that's what I talk about, guys. Like you want to be able to get in right at those. Oh, right there. Okay, right there. Let's zoom in. Right there. Someone could have had a buy limit order at 427, 5 point drawdown. Oof. And then just caught this monster of a trade that's going to happen and I'll show you guys. But let's go ahead and select bar. I don't want to go too far. Okay. Copy image, daily journal. I caught a dub. I was in a sell position off the London high. It price swept the London high by 4 points. So getting in right at the high for the sell was a good choice. I say the trade idea was A plus, and my trade management was A plus. So yeah, just a great day overall, guys. Let's go ahead and put that picture there. Okay, save. Okay, sweet. So now we're gonna go to Wednesday. I have nothing written, but I do want to just exit out of this one. Okay, guys, so technically, like, I'm a little upset at the fact that backtesting, I've already had 2 back-to-back winning days. So this one was, backtesting, this would have been a 2.5. This one would have been like a 2.2, I think, or 2 TP2 on this day right here. For the sell, I don't remember exactly what it was. I think it was a TP risk to reward of 1 to 2. So TP4 going into Wednesday would have been really nice, guys. But for this day, I had a break-even day and then a TP 3.5. So I'm up 3.4, up 3.3 going into Wednesday in my actual account. So let's go ahead and go to the 30-minute and skip forward. We are at 38 minutes, but this is what's going to help you guys, help me become, more consistent, seeing these things, reviewing these things okay, so it's 8 o'clock. I'll go down to the 15-minute chart, move our liquidity lines around, right? London high was created, right there. If it keeps going higher, I'll just move it. Asian session high right there. London low right there. Asian session high or Asian session low was right there, and that previous day low was right there. Okay, previous day high, let's not forget about that right there. Okay, so we could see that London, this had an immediate reaction. Like I said, it kept going up and up. 418, it's already at 670. That's a great move right there. So let's just keep going forward. It is now 9 o'clock. That London high was right there now. And 9 o'clock, 15-minute, 9:15. I'm going to go down to the 5-minute chart right now. Could have a reaction off this previous day high to go lower, but because it's been so bullish, I'd like to see it come down and then keep going higher. I can't really see the any 1 hour fair value gaps, because if I go down the 1 hour, I believe it'll just go to like 10 o'clock, and I don't want it to go to 10 o'clock because then I miss that data. So what I want to do is do a fib from this low. It came down from here to there, so I want to do it from like right there to right there. And look, it doesn't, it's already pushing, guys. I would have to wait for the London low to get ran, come back close to the 79%, 500 big figure levels right there too, to then continue going higher. Now, that's not very probabilistic because it's already at 700. That's a 200-point drop. Someone could be looking to then just take this lower at that high, but because it's been pushing so much, it can continue to push, right? So there's a couple of trade ideas that are coming to mind. Is the London continuation, which would need a retracement to continue higher, or there's going to be a break and retest. Okay, a break and a retest. So let's say a break and retest. I just want to do this with you guys. Like, the price pushes up, anywhere. We'll see if it keeps going higher. If it keeps going higher, this is probably what other traders are looking to do. It's going to go higher, wait for that retest anywhere into this area right here, previous day high, there's London low, to then go higher, right? And if that's the case, we could look to go long at this point, look for a 1 to 3 would probably, at this high, I would probably say 1 to 2.5. So we'll see what happens. Okay, guys, it could just keep falling, or it could trend for the day. Who knows, right? I don't really see anything clear and concise. I don't want to go to the 1 hour, because I want to see where there's any fair value 1 hour fair value gaps. Okay, so it had its push up. Okay, you guys can see that, and it's coming back down. So there's this gap right here that's created. We'll go to the 30-minute, and I'll show you guys what that gap looks like, okay, on the 30-minute. But I can see that it was created on that 1 hour. Okay, so 15-minute. Okay, so there's a gap right here, right at this previous day high, and it closed right here. So if you can't see it, I'll just mark it up. It's this top of this candle's wick, the body to the top of, below that wick of that body. So anywhere in here would be a good trade. I'm going to say I'm going to get in at the previous day high just because it aligns with this area right here. But the previous day low is right here, and it gives enough room for a 50-point stop to continue going higher. Now I want to actually draw this Fibonacci. I want to pull it exactly to where it's at, which aligns, the 38% aligns with this London low, so this London high. So I don't know if I want to wait for that, because it usually price, I could get in right at that bottom of this right here. So 710. Okay, 710 is where I'm looking to get in. I'm gonna delete this right here so you guys can see a little bit better. Where this trade idea is voided. But let's see if we can catch a good trade, a 1 to 2.5. We'll actually just go to 1 to 2. Just get in and get out, right? So if this continues higher and we miss our entry right at 710, well, it would be a good opportunity. Remember, best loser wins. Miss the trades took off. Don't look to sell, buy, frantic emotions. This would be a good time to, if you're using Top Step X, click the lockout button and click all day right there and accept. Come back tomorrow. So, because we're already up for the week, why would we try to lose any money by forcing trades, right? So what we're going to do is just continue. Okay, so we had the reaction. It went into there. It got close to that London high. It never tapped it, but we got in at the previous day low or previous day high, right at that bottom of the fair value gap. And there's a reaction already immediately. So we're going to see if this continues higher. and we got stopped out. So we had our first L for the day. The best trade was to probably just wait. This was not a very good setup. It had been pushing this whole time. So this is our loss, right? This is a loss. So I just want to see, at this point, you have to immediately lock yourself out all day. Once you take a loss, lock yourself out all day. Don't say, well, I'll give myself 2 trades. You're not at that level to be able to identify 2 trades if you're a beginner. Just get out, right? Okay, see? Wow. London low. Oh my God, bro. Like, if this continues to go higher off that London low, I'm going to be sick, right? 79% fib level, London low. That was the original trade idea, right? No, that was the original trade idea. I'm sick right now, guys. London low, TP 2.5 would have been right there, 50-point stop. Where could we have gone in? You know, targeted that previous day high. This would have been a nice 1 to 4 trade. Right there, 1 to 4. Jesus Christ, guys. So the move doesn't always happen right after 9:30, okay, guys? I'm going to be upfront with you guys. It doesn't always happen after 9:30. Now, you know, you could have caught the sells, you know, off the previous day high once it had a reaction coming up, going down. But I think the London low reaction, remember, guys, that was my previous trade idea, to then target like London highs. Wow, that one hurts. This is why it's important to stick to your trade idea, because things like this can happen, and other traders who are disciplined will just say, hey, that's my trade idea and I'm going to stick to it, because I know, because of backtesting and trading real time, there's a high probability that it will happen. Now, it did take a while for this to play out, many hours, but you know, it still played out. So runts. Damn, trade ID. Wow. Okay. So it happens. It happens, right? Okay. See, fair value gaps aren't all the end all be all, right? You know. So it for me personally, I like to trade liquidity zones. And I think the more I do it, I'm gonna have to really like buckle down and wait for the London high, London lows, previous day high, previous day lows, Asian session high, Asian session lows to get ran, to then take trades, because there's a high chance that those are where there's going to be reactions off of. And I've showed you guys this whole, you know, video so far. We've been doing this for 48 minutes, that in fact, you know, there was that reaction off that London low to go higher. So I'm going to just write, this was a losing day, copy image. It was a losing day. I think I lost. Actually, this was a day where I think this was the day, Wednesday, July 9th, right? Let's go to the dashboard. This day, yeah, July 9th was the day I took that loss, when I had saw a TP2. So actually, there was this retracement back to London high that I caught going up here, from here to here, that I caught, and then it came back down and I moved my stop loss and I lost. It was actually this trade that I had caught a 1 to 2 on. So price came up, do it a minute. Price came up, retraced, and I got in for the London, that I don't remember, was Asian session high or London high, something like that. Previous day high, and it was actually right there. Zoom in for you guys. Because price squeezed up, started to come down. I said, well, if it comes down, if it comes into this level, I'm going to get in for the buys. And then it had that 1 to 2 push, which I think I need 1 to 2.2 just to, right there. That should have been my trade, because then it immediately started to fall and I moved my stop loss back. Damn it. Okay. Yeah. Not very happy, guys, on this day, because I violated my trading rules. But I do want to show that my original trade idea prior to coming in, I would have needed to wait, 1.5 hours for price to get back, 2 hours for price to get back to these London lows for me to then go higher. $500 level would have been sick. Where's 500? I think I would have gotten stopped out anyways, guys, if I would have gone in at the London low, because if I would have gotten here, price came back up, came back down, and I would have needed to hold this trade if I got in at that London low. But this actually did play out. So sometimes you have to set and forget just so that you could, because if I would have moved my stop loss up to, you know, break even, because it did move 50 points but then came back down, I would have gotten stopped out and it would have been a break even day, even though this was a winning trade idea. So for certain cases like this, guys, are you willing, because they created this like wick down here, some, even if I would have timed my stop loss to like right there, it would have stopped me out right there. So 21 points, someone could, it's probably best just to have like reduced it a couple of points. I'm not gonna say, if you're willing to put the risk on, if it would just need to hit stop loss regardless. So who knows, right? So I just want to screenshot this 15-minute chart. Copy image. Add trade. We're going to go to the daily journal. Wednesday, July 9th. So we're going to view note. And I'm going to say I had a good trade A, but it was a R to R of 1 to 2, and I did not take it off the table because I was looking for ATP 4. I did move my stop loss to break even, but I let my emotions violate my trading rules, and I moved my stop loss to its original spot, and I took an L. Unnecessary L. Trade management was C. Well, no, C, no, D was, it was a D grade. Now I just need to put my paste. Okay. I can see that I had gone in for the long, but the actual trade idea, my original trade idea, was down here to go higher, which happened a little later in the day. Let's see, that happened at 11, New York time, so 10, 9, 8, 8 o'clock Arizona time, and the market opens at 6:30. So this was an hour and a half after the market opened, to about 2 hours, hour and a half. Yeah, about an hour and a half to 2 hours after the market opened. And yeah, just needed to just be more patient and let this thing kind of do what it's going to do. So at this point, we're just going to delete some of this stuff and go on to the next day. So 7:45, 8, 8:15, 8:30, 8:45, 9. Okay, so we're at 9, 9:15. I'm going to go down to the 5-minute. Do I see any gaps that was created? Oh, 9:15. Okay. We have this previous day high right there. I'm actually going to delete this fib now, and I'm going to do it from this high to this low to see, because it broke this high. So I want to see how high it could go. I think originally I wanted to go short right here the last time because there was this fair value gap right here, and it did trade into it, and then it went lower, but that's neither here nor there. London high was created right there. Asian session low was right there. London low right there. Okay, previous day low. Asian session low, previous day low. Okay. Let's make these a little bit more uniform. Okay. Okay, so we have some areas of interest, right? We have these London lows, London highs, Asian session highs. We're right at 9:15. We'll go to the 5-minute chart. And you can see that price had to move up. We could wait for this London low to get ran to then go higher. So my trade idea would be to just, wait for this London low to get ran. 50-point stop, looking to target probably London high or possibly the Asian session high. So right there. So I think for me, I think that would probably be best, is just wait for a retracement to go higher. But this could continue going higher, and who knows how this is going to play out. So the only thing I can see is that it's already had this run up, came down, and it's starting to go. I feel like this is more bullish than not price action. So we're at 9:25. So the next candle, click I give is going to be that 9:30 candle. So we're going to see what's going to happen. Okay, there was a retracement and it's starting to go higher. This could have been the retracement to continue going higher. I'm waiting for it to run this London low, and it ran the London high. So I don't want to just say, oh, because it ran the London high, I want to go short. My bias is to go long. So let's see. Imagine if I went short at London high just because I said I wanted to go short. It ran the London high. It gave a retracement right here to then go higher, and I just missed it. And wow, would have been a no trade day for me, I guess. Where could we have gone in at? Because we could have done a fib maybe from this low to that high, and come down to that 50% level, right? We could have gone in at that 50%, and it could have came lower, but other people saw this and decided to jump in and targeted probably that previous day high or TP4, and this would have been a nice solid trade. It did go crazy. TP7 would have been nice. Right there. It would have closed out, up in this area. But it's so hard for me to say this because during the trading day, could I have not taken a trade because it didn't go into my area? That's the thing. Missing a trade, FOMO, fear of missing out, that's a real thing. And I think I did take a loss, but the trade was to the 50% of this move right here to then go higher. Was there a fair value gap? Yeah, I think there was a fair value gap. I think there was a fair value gap right between these two 5-minute candles, but there also was this order block that it could have traded back into, and it did, aligned with the 50% level. So it, even if you got in at that 38% level, it still would have survived that move, and it would have, still would have had a TP7 going up into this candle right here. So yeah, guys, the move happened. Let's say the 50%, just, and TP7 was right there as well. So this could have been a great trade. 5-minute, 11:15 a.m., which would have been 10, 9, 8, 8:15. About 2-hour trade, hour and 45-minute trade, and it could have caught a TP7. Just really bullish, right? But yeah, this is what happened, and at this point, I don't know what's going to happen. It kept going higher. Look at that. Wow. So even a TP, it would have never been a TP8. TP7.5 would have been it, or TP7. We'll just do TP7. Wow. Okay, guys. So I'm going to remove this and just say that I'm going to journal. I don't think I've ever done this while journaling, but what day is this? Thursday. I don't think, oh, we'll do it Thursday. Wednesday. I don't see why Thursday is not popping up. So let's view note. Let's see if we can't skip somehow the days. Oh, you know what happened on Thursday was Top Step X had a power outage. And for people who took and lost, they gave the money back. And for people who won the trade, they just kept it as is. But yeah, this was Thursday. I did have a losing day that day, and I'm glad that Top Step X did that because I would have essentially been a break-even week for me. But yeah, just needed to really just not. This day hurt me a lot, and this day hurt me a lot. I should have just not traded on this day. So Friday we're gonna. I don't. That guys. Like I'm up night. I'm not really happy doing this trade review right now, because I messed up this past week. Even though it was a winning week, I still messed up a lot. So let's just go ahead and go forward. 15-minute. $4.30. 6:15, 6:30, 6:45, 7. Okay, we're at 7:15, so that means we're gonna go down to the 5-minute chart, mark up the previous day high, Asian session high, London high, London low, Asian session low, previous day low, which is right there. And then what we're gonna do is just move these to the 1800 point right there. It's fine. Okay, so here we go. Going into Friday. It's 7:25. 7:30 is the move, right? So, or 9:30, 9:30, 9:30. Okay, so we still got a couple of minutes we can continue going forward. It is 8:25, 9, 9:15. Okay. So it didn't really create any different liquidity zones. From this point forward, you know, London is ranging, but it did have this big fall. So technically what someone could do is see that, hey, there was this big move, now it's bearish. Um, from this low to this high, we could do a Fibonacci and just see where price, yeah, it went into that 79%. We could see that it had this move. Is there any gaps? Okay, so technically it's 915, 920, 925. Okay, so as 925 coming into 925, 600 level, I feel like I'm gonna wait for this London low to get ran to then go higher. Who knows if this is what's gonna happen? But this is where I'm willing to risk $100 to make, we'll go to that London high, right there, right? So let's see what happens. Oh my God, it went to that London high and then had an immediate reaction. So seeing this, it's probably not good. And this was Friday. This is the day it was choppy day. So at this point, someone could wait for this London low to get ran to then target up here, okay? So I'm going to keep my trade idea, the London low, 50-point stop, to then target maybe a 1 to 2, okay? So let's see what happens. Right there. Okay, so we would have gotten in right there. Okay, we would have survived this move right here. It came down, came back up. And what we're going to do is just see if it goes to TP. Well, it needs to be like TP 2.2. Almost. Almost. There we go. Okay, it would have played out this move right here. Choppy day, but this trade would have played out. So back testing, guys, I just have to have faith in the London lows and London highs. The trade may not happen exactly where you at 9:30. It's not going to happen exactly at 9:30. So what we have to do is be patient and wait for these liquidity zones, these liquidity lines that I have drawn up to get ran to then go in for a trade. Now, could this go up to back to this London high? I doubt it because of how much pressure there was, but we could have gone in for a nice 1 to 2 trade right there and been out and would have had a winning day to close up Friday. So let's see what happens for the rest of the day. And it did go to that London high. Oh my God, TP. So there is this move that then ran that, London high, and it could have been someone could have wanted to get in for this move to then go lower, because this right here, it never ran that high. It got close to it and then had a reaction. So, but it ran it right here. So then this move could go down to then maybe this previous day low, we'll say, okay? TP 2.5. This would have been a nice TP 2.8, TP 2.5. We'll just keep it at 2.5. Even the TP 2 would have, so let's see what happens here if someone had a sell limit right at that, London high. Okay, having a reaction, would have been break even at this point. Let's see if it keeps dropping to go to that previous day low, and it did right there. So there was plenty of times, there's plenty of trades that could have been played out right here, guys, and it's up to us to get in and get out. And yeah, so I would say my original trade idea would have probably been to, get in at this London low to then go higher. 50-point stop would have been close to getting stopped out and targeting this London high. Nice little 2.8, right? And this is why it's so important, guys. You cannot say, oh, well, I want a TP3, because TP3 would have never gotten hit. You have to look to go to these liquidity zones, because some of these liquidity zones barely get ran, and then there's a reaction. So it's best just to have your target at that liquidity line, like London high, and the risk reward is a TP 2.84. Now, if I was looking for more, I would have never got it, and then I would have lost the trade, right? So it's best just to target these liquidity zones, and if it's not an exact whole number, who cares? Who cares? Get in, get out. Okay, so that was my trade idea. Let's kind of go forward a little bit, and could have been a couple of trade ideas for the day, right? So we're gonna go down to the 15 and just screenshot this. And in line with that 79% fib level. Okay, so copy image, daily journal, Friday. Yeah, so this is the trade idea that I had on Friday. I did take a loss. I should have waited for that London low to get ran, and that's my fault because I just wanted to force a trade, right? So I have to have faith in the idea that price will have reactions, go back to these levels, and if it doesn't, then it's a no trade day. It's best just to Martin, I'm talking to myself now at this point. Martin, it is important that you lock yourself out if you don't feel comfortable. If you feel like you're going to force a trade, set your sell limit or buy limits at those liquidity lines, London highs, London lows. There's always a reaction off those particular zones, right? The London low and London high. There's always a reaction. So please be more patient and just set your limit and set and forget, essentially. Let the trade do what it's going to do. You will be more profitable next week because you're going to follow the rules. You're going to have faith in your strategy. You know better. You've been saying this for weeks that you're going to just place your limit orders at the London highs, London lows, and just do very good. My goal this week is just to follow the rules and get out of drawdown. I said that last week, and I could have been close to being out of it this week, but didn't. It was still a dub week, but I need to do better. I need not to give back so much, and I need to have faith in my setups and trade ideas, because if the trade starts to take off, there's a probability that it's going to come down or do whatever it's going to do for the day. But I need to get in at those London lows, London highs to have a high chance of surviving the shakeouts and to then have a reaction off those levels to then go higher. So thank you guys for staying with me for an hour and 12 minutes. It's going to be an hour and 14 minutes by the time I'm done with this. But yes, like, comment, subscribe. I hope you guys are doing good trading. I hope you guys are making money. I hope you guys are living the life that you dreamed of. Remember, it's not about the money. It's about buying your freedom back, helping your family, just having the extra income, have extra security by just following the rules. If you're new at this, just keep having faith that you're going to catch on and see these things and do it so much that you're going to have an intuition in the markets. The only thing that's going to hold you back is you and the way that you trade with FOMO, revenge trading, over leveraging, just multiple trades that are unnecessary. It's best just to lock yourself out all day. If you feel like you're not going to wait for a London low, London high to get ran, or some type of Asian session high, Asian session low to get ran, to get in for the trades. Previous day high, previous day low, but more often than not, it's going to be the London high, London low, where there's going to be a nice reaction. And you guys can see that here. All right, have a good one.